In this video, we're going to go over what I think could potentially be the perfect higher yielding portfolio for a dividend investor out there that wants to earn and receive a lot more cash flow a lot quicker, but also wants to have exposure to positions and ETFs that are going to grow their portfolio significantly over time. Now we're going to go through every single one of the 6 positions, and I'm going to explain exactly why I would add each and every one of these ETFs in this overall portfolio and what they each have to offer. So if you want to dig into this 10% yielding dividend income focused portfolio with me, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first ETF, the first position that I would include in this higher yielding portfolio, and I'm going to break down the entire makeup of the portfolio towards the end of the video, so stay tuned for that. But the first position would be SPYI, or the NEOS S&P 500 High Income ETF. Now the reason I would add in SPYI to my higher yielding portfolio, if I were to build a portfolio with just several few ETFs, this ETF, at least so far over time, has paid significant amounts of dividends to investors. But not only that, this ETF has basically traded sideways and hasn't decayed much at all. Now you see, a lot of times when investments are going to yield say 10-12%, especially cover call style ETFs like this one, and that's just due to the nature of the ETF. But like I said, not only has SPYI's price held up pretty well, but also SPYI pays around 12% yield and has paid investors like myself, because I own quite a bit of SPYI, dividends around 50 cents more or less every single month for the last year now. Now, even though SPYI does pay a dividend monthly and has the potential to generate a ton of income a lot faster than other ETFs across the market, even though all that's for certain, I still think that a portfolio needs to have a balance. And although SPYI offers a ton of income, we're going to also need some ETFs in the portfolio if we were to build a high quality, high yielding portfolio that are going to help the portfolio grow also. But just for the first position for this portfolio, I would without a doubt add a large portion of the NEOS S&P 500 High Income ETF, SPYI. Now the next position that we are going to have in this higher yielding portfolio is an ETF that actually doesn't yield all that high altogether, but does offer some massive dividend growth and offers some upside historically. We're talking about SEHD, or the Schwab US Dividend Equity ETF, one of my favorite holdings and one of the largest ETFs I currently hold across my portfolios as of right now. Now SEHD is only yielding around 3.5%, so although this ETF isn't going to generate a ton of cash flow necessarily from day one, SEHD over the long term has paid around 11% more in dividends year after year, which is an extremely fast dividend growth rate. Now once again, this basically means that even though you're getting a 3.5% more or less starting yield when you buy into SEHD, you are going to get paid, at least when off of historical numbers, more and more cash flow year after year. So just a few years down the road, that 3.5% could easily be a well above 4% yield on cost. Not to mention, like I said a minute ago, this ETF also has grown significantly as far as price return long term. Which is exactly why, even if you were to build out a portfolio with just a few different ETFs, even if you're looking for ETFs that offer massive cash flow, I still think SEHD fits in this ETF because, of course, the massive dividend growth and the decent starting yield around 3.5%. The next position that we're going to have in the portfolio would also have to be JEPQ, another one of my large holdings, which currently is offering around a 9 or 10% dividend yield, which is massive. Not to mention JEPQ has grown like crazy in ETF price long term, and although because JEPQ is another covered call style ETF, it's not really going to pay the same exact amount of dividends every single month. But historically speaking, as you can see right here, JEPQ has paid around 40 cents more or less for most months over the last 12 or so months, which has given investors not only exposure to upside, which this ETF definitely has showcased in the last year or so, but also a ton of income to follow. JEPQ would definitely be a large portion of a portfolio if I was building out just a relatively small portfolio, which is a few high quality, higher yielding ETFs. JEPQ would definitely fit the bill. An ultra high yielder that I would definitely add to the portfolio if we were just building a 6 ETF portfolio that's going to yield somewhere of around 10%, it would have to be SVOL, or the Simplified Volatility Premium ETF. Now this is an ETF that I personally think offers a little bit more risk, and that's no surprise considering this ETF yields around 16-17%. Not to mention this ETF pays around 30 cents per share per month, and it has more or less over the last 12 months. And this is for an ETF that costs around $20 per share. Now there is some risks associated with SVOL. This ETF actually has dropped a little bit on the max time frame, so investors have seen a bit of NAV decay. But as far as total return goes, and as far as an alternative investment, if you want some exposure into some alternative income generating vehicles, SVOL will definitely have to become a small portion of the portfolio without a doubt, which in doing so is going to boost the amount of income for this portfolio significantly. Another ETF that we're going to add into this portfolio would have to be one of my new favorites. I'm talking about iSpy, or the ProShares S&P 500 High Income ETF. Now this ETF offers a 10.25% dividend yield and does what a lot of the other income-focused ETFs does also, but seem to do it better. Now the dividend payouts are sort of all over the place, as you can see with iSpy. It's going to have a lot to do with things like volatility and others, but still this ETF is paid right around 30 cents more or less, maybe even higher than that over the last year or so, which is a massive amount of income considering this ETF is just around $41 per share. Now the last and final position that we're going to have in this portfolio, and just stick around because I'm going to show you the entire portfolio and all the dividends in a second here, it would have to be Devo, the Amplify CWP Enhanced Dividend Income ETF. Now even though Devo isn't ultra high yield or even really super high yield at that, it's only offering around a 4.6% dividend yield. This ETF is super consistent, it has upside potential, which also is important of course. Income is very important, but we also want our portfolios to grow long term. And to see exactly how much this ETF is paid as far as income goes, around 14 or 15 cents over time, and as you can see over the last year or so, it's actually went up and up and up, which is awesome. But more or less around $1.79 per share was paid as far as dividends go for an ETF that costs around $38 per share, which is still a decent starting yield. Now I know we're sort of focused on income here, but like I said, Devo has a rock solid strategy. We've talked about Devo in previous videos, and you guys know at this point that I love this one. But like I said also, historically the dividend seems to be going up, at least slowly over time, and on top of that, Devo definitely has upside potential too. So now that we went over all 6 of the different ETFs that I would include in a higher yielding portfolio, ETFs that not only are going to pay a nice amount of income from day one, but also ETFs that are going to grow over time, at least some more than others. As you can see right here, the breakdown is as follows. We have SPYI, which is going to pay the majority of income for this ETF. Then we have a ton of income coming from things like SVOL. We have JEPQ paying quite a bit. Then smaller amounts of income, but more amounts of upside could be from ETFs like iSpy, SCHD, or even Devo. And as you can see right here, this portfolio, with the way that it's mixed up with the different holdings, is currently worth around $6,500 worth of different ETFs. And with this $6,500 portfolio, it's earning around $650 per year in dividends, or around a 9.67 dividend yield. But maybe more importantly, for a smaller dividend investor trying to build out a long-term portfolio that not only pays them dividend, but also has the potential to grow over time, an ETF portfolio like the one I just shared with you has the potential to grow substantially over time if, of course, you keep contributing, but also if you, of course, reinvest those juicy dividends along the way. As you can see right now, the portfolio earns just over $640, but by 5 years from now, if an investor added $10K per year and also reinvested dividends, you could be up to $6,900 per year in dividends. By 2044, if you kept doing this, $60,000 plus in dividends per year. So I wanted to share with you an example of what a portfolio could look like that offers a nice amount of dividend income from day one, but on top of that, it has some exposure to ETFs that are also going to grow over time. But now lastly, most importantly, I want to hear from you guys down below. What is the number one ETF that you've been adding as of recently to your portfolio? Whether it's for income generation or upside, drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.